We're going to discuss today the Swiss franc and the movement that has been happening in the Swiss franc since yesterday. We had quite a big moves and a rush in the Swiss franc against all major currencies, starting with the US dollar. And as you can see from the chart, that the dollar Swiss has traded yesterday to a low of 102.86, and today it has put in a low of 102.50 and is continuing this decline. The same flight into the Swiss franc against the dollar has been common with the Swiss, with all the Swiss crosses, and you can see that in the Euro Swiss, today the Euro Swiss is trading at 1.30032, which is the highest level the Swiss franc has ever been against the euro, or the lowest the euro has ever been against the Swiss franc. And this is the weekly chart, and you can see now we do have a genuine breakdown to the downside, and we should be looking for a further decline. Having said that, we need to be also very cognizant and be very aware of a possible short covering rally. So we need to make sure that our stops are placed in the proper place so that we do not get caught in a, as I said, a short covering rally. Also, this is the weekly chart for the pound Swiss. You can see the decline that we have in the pound, and we're coming pretty close to a structural breakdown to the downside, which is the 108.30. We actually came pretty close to testing it today at 158.27. Your structural point is the 158.30, so that is a pretty close test of the low. We did bounce off the structural point, but still this is a confirmed decline. We should be looking towards a continuation to the downside. So there is a major move or a major flight into the Swiss franc. Also, you can see the same pattern with regards to the Aussie Swiss. We have now broken the structural point at 9051, and we're trading right now as of this recording at 9048. So having said that, we should be looking for a continuation of the movement into the Swiss franc, but what's important now is to time ourselves into that trade, because the move in the Swiss franc is quite interesting, because the Swiss National Bank has been for the last year or so trying to intervene to prevent the appreciation of the Swiss franc against the various crosses, and that intervention had been falling or failing time and again. Every time they intervene, they are successful for a very short term to push the Swiss franc down, or to stabilize the Swiss franc, only for it to turn around and to continue and move. So usually these interventions happen when the market is overextended. Usually the intervention would happen when there is a capitulation, let's say in the Aussie Swiss, or that the Swiss franc moves and makes new highs and that market is overextended. This is usually the best times for the banks to come in, or the central banks to come in and intervene. Having said that, we still have to be looking at the short side. We need to be taking the short side and going in the direction with the direction of the trend. But what rather we need to do is we need to identify our exit points, or our short covering points, and these have to be structural points that you have to pinpoint on your charts and to identify them, and they have to be your line in the sand. We want to be short all the pairs versus the Swiss. But at the same token, we need to make sure that if we are going to take a short position, our stops need to be very well defined. They need to be placed firmly on a technical location on the chart, and they need not, and they should not, and must not be moved. These markets now are overextended in favor of the Swiss franc, and we can expect that the Swiss National Bank to do what it has been doing for the last year and a half, is to intervene. And as I said, they want to maximize their intervention, so they will wait until the market is extended in the direction of the Swiss franc. Okay? See you this evening.